Trading this morning was fun. Have you seen the news? We've got a research firm calling for a Bitcoin path to 190K on an institutional wave, a fresh data dump showing US spot Bitcoin ETFs sucking up a big chunk of trading volume, and Binance briefly slamming the brakes on all futures after an issue on its unified margin platform. The market's going crazy. Are you watching? Stick around for the bold BTC and top all three at the end. Plus, here are some sneaky tips I'm keeping in mind for the next few weeks. Let's start with the spicy one. A major research firm says Bitcoin's road to $190,000 runs through institutions. Think pensions, endowments, model portfolios, and yes, ETFs. The thesis is simple. As crypto blends into traditional asset allocation and compliance boxes get checked, flows compound and supply stays tight. If that sounds like the 2020-2021 playbook, it is, but with bigger pipes this time. Why it matters to traders like us. Institutional adoption doesn't mean straight lines. It often compresses volatility, then unleashes it around rebalancing days, macro prints, and ETF flow shocks. My take, respect the long arc, but trade the swings. Entries on retests, define invalidation, and don't confuse a calendar inflow with a guaranteed green candle. If flows accelerate, higher highs become a probability game, not a meme, as reported, CDC. Speaking of flows, wait till you hear what the ETFs are doing. Fresh analysis shows US spot Bitcoin ETFs are now a major source of BTC spot trading volume. Translation, more price discovery is routing through regulated wrappers, authorized participants, and creation and redemption types. Why this matters? Microstructure changes. You get stronger volume at US opens and closes, cleaner liquidity around ETF-related windows, and weekend depth that can feel thinner because ETF pipes nap on Saturdays. For day trading, that's gold. Time risk around the ETF rhythm. Hunt for setups into the US cash open, watch for basis and funding to normalize after inflow days, and avoid chasing thin weekend spikes without confirmation. Now this is what I'm looking at for the week. Track net ETF flows, then map them to nearby levels. If we see inflows with price holding prior day's value area, continuation is on the table. If inflows arrive but price can't reclaim the breakdown zone, it's distribution in disguise, as reported, CTG. And then boom, right when everyone got comfy, Binance halted all futures trading after an issue on its unified margin platform. If you were mid-trade, that's the gut check reminder we all hate but need. Platform risk is real. This isn't about dunking on the venue, it's about survival. When a top exchange pauses, you get sudden basis dislocations, phantom wicks, and forced patience. My rule set in moments like this: 1. Redundancy. Keep a backup venue with funds ready, test it monthly. 2. Sizing. Cut position size when platform risk climbs, widen stops modestly, and reduce leverage. And 3. Confirmation over prediction. If funding and spreads go haywire, wait for them to normalize before putting size back on. Now this is what I'm looking at for the week. Track net ETF flows, then map them to nearby levels. If we see inflows with price holding prior day's value area, continuation is on the table. If inflows arrive but price can't reclaim the breakdown zone, it's distribution in disguise, as reported, CTG. Tie these three together and the picture gets interesting. On one side, a structural bid is forming as institutions allocate through ETFs. On the other, the microstructure is evolving. Volume clustering at US windows, off-hours liquidity quirks, and venues reminding us there's still tech platforms with failure modes. Net-net, it's a dream for disciplined traders and a nightmare for FOMO. Stick around because I'll give you the quick BTC and alts frame I'm using for the next few sessions. First, BTC. If ETF inflows remain solid and we hold the prior day's value area, watch your volume profile. Continuation higher becomes the base case, with each retest of the reclaimed level as a spot to define risk tight. If we lose that area on rising volume and can't reclaim it within a few candles, that's a distribution signal. Step aside, let the sweep run, then only long on a clear reclaim and funding normalization. That's how you avoid catching falling knives while keeping your powder dry for the bounce. CTG. Top alts, be picky. Coins with clean liquidity and narrative air cover tend to ride BTC structure the best during institutional flow regimes. Look for tight spreads and stable funding, real catalysts, not recycled Twitter hopes, and levels you can actually trade. Prior days high or low, breakdown zones, and obvious consolidation shelves. If an alt's book turns into a ghost town during ETF heavy hours, keep size tiny or skip it. Liquidity is a feature, not a feeling. Here are some sneaky tips I'm keeping in mind for the next few weeks. 1. Front run nothing. React fast. Let ETF flow days show their hand, then execute at the retest. 2. Keep a platform risk mood ring on your desk. If a venue coughs, treat spreads like lava until they cool. 3. Size by realized volatility. If the ATR on your time frame doubles, your position size should half. 2. Source rule for news trades. Single tweets are not setups, they're traps. 5. Time stops matter. If a trade doesn't move after your window, flatten and look for the next pitch. Now this is what I'm looking at for the week. ETF net flows versus price reaction, funding basis sanity checks after the Binance hiccup, and whether BTC can build higher lows above the most recent value area. If yes, continuation. If no, range or another sweep before the next leg. CTG, CTG. And about that 190K call, here's how I translate it into action. I don't trade the headline. I trade the path. Institutional adoption stacks probabilities in BTC's favor over quarters and years, but my entries live on daily and intraday structure, value areas, liquidity pockets, reclaim reject behaviors. The big number is a North Star, not a blindfold. If I get paid on clean retests, I don't need to nail the top. If I'm wrong, my invalidation is tight and my day survives to fight again. That's the whole game. CTG. Stick around for the bold BTC and top alts prediction at the end. All right, here's the human, not hedged version. If ETF volume share keeps rising through next week and Binance's futures rails stabilize without lingering distortions, I think BTC has the juice to probe back into the prior breakdown zone and test sellers. If that area flips to support on rising volume, top alts with clean books and catalysts should follow. If ETF flows stall and we see persistent funding stress after the outage, expect a choppy, mean reverting week. Great for scalpers, brutal for swing FOMO. Either way, plan the trade, not the dream. The market's going crazy. Are you watching? If you got value from this, smash like some more traders, get the survival playbook, drop a comment with the exact BTC level you're watching next, support you trust or resistance you're fading, and tell me your backup exchange plan if a venue pauses mid-trade. And if you want crypto news with fewer buzzwords and more edge, hit subscribe and ring the bell. Educational only, not financial advice. Let's trade the plan, not the headline.